Afternoon all, how are we all doing? Welcome back, FOMC afternoon. Exciting stuff. Give me a sec. Let's try and do something over here. Right, sorry. Afternoon, Steve, Burke, Ian, Evans, it's time. How are we doing? David, Amy, XRUpdate.news. Will gold spike and bring down the JPYs? Who knows? We'll find out at 7:30 this evening. Greetings from Croatia, Lenart. Oh, hello. I'm coming there at the end of the month. Hopefully it's not on fire. Afternoon, JC, Astro. Afternoon, Peter, Marco, Virginia. Afternoon, Emac. So just closed out a Euro odd trade. Just trying to get as flat as I can before FOMC, basically. This was an H1 M5 mean reversion from Monday. So that's the first entry there. Second entry was there. I've just closed the second entry out. I've just posted it in Telegram, but basically we've hit this high and it rejected that high and then started to push down. So what I didn't want was them hitting that high, bringing it all the way back down to here for FOMC and just undoing that move. So it made sense just to bank that one. If it does push down, I'll add that one back on and take it off again on the next push up. If it pushes up, I'll get out of that position in profit. Either way, still profit. So so just close that out. Just reduces my what I'm trying to do is just reduce my US dollar and Canadian exposure before FOMC, because obviously FOMC is this evening. So the US and the CAD will be the most affected by it. So I'm just reducing risk, banking profit on those pairs just ahead of the news. Speaking of news, it's FOMC day. So we got home sales at 3. Doesn't tend to do anything, so not worried about that. But 7 o'clock FOMC, we'll find out what the rate's going to be. Expecting it to be a 5.5, which is forecast. Unlikely we'll get anything different. The Fed is usually pretty good. If you look at history, the Fed does what it says. It's just not very good at it, but does what it says. So unlikely we'll get anything different than 5.5. It very, very rarely fluctuates. 7:30, we've got the FOMC press conference. This is when we're going to get all the movement this afternoon, or this evening rather. So as soon as that rate comes out, we will get the initial reaction to that rate, which would typically be either a whipsaw or they'll push it and hold it, depending on whether they're wanting to go long or short. And then when we get the press conference come out, the forward guidance from the Fed will tell us whether or not the market's going to be long short for the next 4 to 12 weeks. And that is when the market will tend to start to move. So the market moves somewhere between 7:45 and 8 o'clock. Typically, that's when the proper move starts. The initial whipsaw off of the FOMC announcement and statement is just whipsaw. So, but sometimes we do get a big move. There's something in the statement that is blatantly obvious, and they will move it on that. It's the statement and the press conference, which is the important part. We know what the rate's going to be. That doesn't move the market. The market's already reacted to that rate move. It's moved into it. It's all priced in. This is what's interesting. Yeah. So that is this evening. So far, we've had loads of stock movement today. We've had some nice big wins, some nice big losses on stocks. Rolls-Royce is up 19%. There's loads of stuff going on. The Russians are increasing oil exports. So oil's come down. Obviously, more export means more production, more supply means smaller pricing. So oil's having a little bit of a drop, nothing dramatic. Apart from that, nothing this morning. So very quiet this morning. Missed the DAX this morning. I didn't take the DAX this morning. So my P&L is flat today so far. It was the mother of all opening range breakouts today. If you took the ORB today, with the EA, whether you took the pre-market 5, 15, or whatever you took, it's there. The pre-market 5, 15, 10, whatever you took, it went and it didn't stop. Whether you took the 5-minute ORB, the 15-minute post-market, pre-market, it doesn't matter what you did today. If you're in it, you've absolutely killed it. Just, my risk reward doesn't do this, but that's your risk reward on the pre-market 15, 10R. That's the pre-market 15. If you took the pre-market 5, I don't know what that is. It's 22R. I don't know. If you took the 5-minute ORB, you're 4.5R. So yeah, I mean, today, one of those ones. Like I say, this new version that I'm running of the EA is no better or worse. It's different. That's it. It's different. It's just a little bit more logical in its entries based on historical fact. But historical fact, as we know, has got absolutely nothing to do with what happens today. If the market wants to dump it, the market will dump it. And it certainly did. Big one. So we're 150 ADR heading to 175 on the DAX. US indices open in 2 minutes. Obviously the DAX is coming down into last week's low. We're just approaching it, but look at how we've got there. Yeah, it's been like 1, 2, 3, 4, 5, 6, 7 days up. The entire lot undone today. So where this thing goes from here, who knows? This thing could bounce all the way back up here this afternoon. No idea. So go with the momentum if you want to trade the DAX, but you should be trading the Dow and the US indices. They've all sold off as well. So the Dow sold off with the DAX. The main US indices, the NASDAQ and the S&P, are both down on the morning, but nothing dramatic. So we're nowhere near ADR on these two at all by a long shot. We've gone nowhere really. The Dow, again, we've got so much room. So there's no distances hit dramatically on the US indices. So these are open, fair game today. Go with momentum. Yeah, you've seen the stock movement on the DAX. It's earnings season in the US, so this could go nuts today. So just be prepared. 30 seconds to the open. Morning, John. Afternoon, even. Brian, do you think the Dow is on the way down after the long period of consolidation? I don't know. Could be. Market's just about to open. 20 seconds. I think we've got a pullback. Yeah, I mean we've had a hell of a rally. There's no profit take moves at all on this. I wouldn't be surprised if we get a pullback into here to get some steam up. Stocks are overpriced at the moment. It's just going to take a few bad earnings for this thing to collapse in the same way as the DAX has today. So there's your pre-market 15 on the Dow. Flip, you've gone long. Potentially. Oof, this is whippy. Whippy. Didn't trigger that. Not quite triggered on that pre-market. Now I'm in. Long on the Dow. The other ranges were too tight. So range on the S&P was very tight. NASDAQ's pretty tight, but gone long on all indices. So initial break is to the upside. If this does whip today, I'm going to get hedged on the Dow. Go whichever way it goes, but bit of volatility came in. Big lot of volume came in at the open there. So just looking at these today from a levels perspective, obviously the Dow, we've just pulled back into this propulsion gap and support here. So basically a support level. Upside targets, forget that previous day. That one is yesterday's high. That's well within ADR today. Dow's pushing nicely. So that's well within ADR, and obviously ADR to the upside. There's nothing to stop the Dow. There's no upside. So there's lots of downside to stop it, but there's no upside. The DAX has managed to slam straight through everything this afternoon. So, this could do exactly the same thing. But there's no upside on it. The other two indices, the S&P and the NASDAQ, have dropped. So there is upside resistance. Not so much on the S&P. So pre-market Dow, lovely break today. NASDAQ total whipsaw. Look at this difference in stocks today. Dow off the scale to the top. NASDAQ short. S&P nowhere. Total divergence across all three indexes. This is earnings season, yeah? This is, some of these stocks have had positive earnings, some have had negative earnings, and they're all in different indexes. So they can all go wherever the hell they want today. They're going to be buying all sorts of stuff all over the place. So S&P, sorry, Dow testing Globex highs. There's your high of the session so far. It's too close to target. There we go. There's Globex highs. Okay, closing first trade. Break even on the second. Whoa. That was too close. Still the rejection there, yeah? Load of limits triggered at the Globex high. So pushed it straight back down again. So this is where the battle's going to start. See if we can get through. If we get through, be looking at yesterday's high. But that was my TP. There's no way as soon as that rejected like that, I was going to let that drop. So that was why I took it off. Again, same as yesterday. That's what I lost. That's what I made. Yeah, so I'm not going to let this thing, let all that money disappear. Just for the sake of that amount of distance and hitting a TP. Close it. Take it. It's cash. So NASDAQ, if you're on the pre-market ranges on the NASDAQ, you are stopped out on your long and you are short. Quite possibly hit target on that already. That's 1.5 R to the downside already, isn't it, on that one? So your pre-market is 2R, probably 3R. Why have I not got 3R on there? Should put 3R on there, shouldn't we, as well? Oops. Should have a 3R, shouldn't we? There we go. So that's a 3R short on the NASDAQ. If you took the pre-market 15, if you took the pre-market 5, it's just over 3R. So you stopped out on 1R and you've made 2. That one, you're many R, many R, however many that is. The 15 on that, which is what I'm on. Basically 4R. Very nice. Very nice. So S&P, I'm taking the 5-minute opening range. So the 5-minute ORB is in. So I'll take a break of that on the S&P. NASDAQ, that's too big. Not going to take that one today, but I'll go on the S&P. Dow, TP2, I'm just going to stick that at ADR. Because God, I can't adjust anything today. There's no upside from here. So if we break yesterday's high today, there's nothing to the left on the Dow. Yeah, it's clear air, straight out the top. So NASDAQ, obviously, we've got plenty of upside resistance. We've got that high there. We've got this propulsion gap. We've got a tiny little gap fill to do there. And then we've got the weekly high. But this is all 225 ADR away. Yeah, so that's too far, really, to hit in a day. It can do, but it's going to be very hard work to get all the way up there today, especially on FOMC. But saying that, you can see the 5-minute opening range on the Dow. Big, isn't it? So yeah, looking at the Dow upside, yeah, go back to the 4-hour chart and scale out. We are in clear air. There is nothing interesting at all. It's literally go as far as you want, basically. So ADR is typically what we achieve 58% of the time. So that's what I target, just under that high ADR, and see if we can get there on the second position. It's going to have to push it some, but we'll see. No breakout on the S&P so far. I'm toying with the idea of taking this off on the pound US. Exactly the same reason as I took the Euro CAD off. Just to put this in the bank and make sure I've got it for FOMC. If it pops, that's fine. That hits target. We make money. In fact, I've moved that TP up. If it drops, I get the opportunity to add that on and win it again. So I'm just toying with the idea whether to not to take this. We're bullish for the last hour, and we've got a lot of room to the upside. That area there is where I would probably want to TP on that. So what I'm going to do, what we'll do, we'll move the whole TP on the entire position to there on both entries. So if we can get there today by FOMC, I'll go flat on the pound US and just take whatever's there and stick it over there, rather than get greedy. What I don't want to do is jump up to here, hit a little bit of resistance, yeah, and then FOMC tanks it. Just take what you've got ahead of the news if you get it. Afternoon, Gordy. Afternoon, Day Trader FX. Not sure if I said hello, Kennelly. Right, ADRs. We've got a few ADRs to look at today, just while we're waiting for the continuation moves. DAX is coming up. ADRs today, we've got Aussie dollar Swiss. So the Aussie dollar obviously had the CPI figures this morning, which were 0.8 on a forecast of 1. So that is good, better than expected. They were expecting inflation to be 1%. We got 0.8. So good for the economy, good for the Australian people, bad for the Australian dollar because it releases inflationary pressure, makes the dollar less, buy less, and it reduces the chances of interest rate rises, which makes the currency less attractive. So Aussie had the initial drop on the news. I said this morning, if you're in the live room, good opportunity to sell any pullbacks you get on the Aussie. So as you can see, we got a little bit of a pullback and a lovely drop down to ADR. I'd be wary about buying the Aussie dollar off of ADRs today. First off, obviously, it's FOMC day. Everything is going to go nuts at 7:30 this evening. So it's just not the day to be getting into long-term positions just for the sake of it. So if you get any really big extensions on RSIs, then yeah, I mean, I'll be getting into anything that gets extended on RSI because the EA will be getting me in. But I will be obviously having a look at it all before FOMC. So there is an opportunity for a pullback on it, but obviously this has been bad news for the Australian dollar today, therefore it's come down. So you are buying basically into bad news, which is not necessarily the best thing to do. However, it has done the gap fill. We are approaching weekly support. We are at ADR today, and we have got a lovely big propulsion gap target to aim for back up to the upside, same as that. So yeah, I mean, it could well push up. The other thing you got to bear in mind if you're going to take this one today is it's the Swiss franc. Swiss franc has got news tomorrow. The euro interest rate comes out tomorrow afternoon. The euro will move with the Swiss franc. Therefore, the Swissy is going to go nuts tomorrow. So everything's going to go nuts tonight. Euro and Swissy are going to go nuts tomorrow. Yen's going to go nuts on Friday. So everything that you're taking, you just got to think ahead a day or two, what's going to be happening in the next couple of days. All good opportunities, yeah? If the Swiss franc dumps with the euro, this thing's going to be up here tomorrow, yeah? So it doesn't mean because the Aussies had bad news, it's going to continually drop. if everything drops further and faster, i.e. the Swiss franc and the Australian dollar, this is going to pump. So there is an opportunity for an ADR reversal. So you can drop down M5. If you've got the EA, obviously it will be getting in automatically for you. But otherwise, you can drop down to M5, take the reversal alert when the chart updates on M5. You've probably had a reversal alert on that. Looking where it is on M15, you're about to get actually an M15 reversal alert. And I would imagine if the chart updates, you'll get a 5-minute reversal alert in a second as well. There we go. That's good timing. Not bad, was it? So there you go. So there's your reversal alert, support rectangle. That candle is just about to reverse. So there's your entry. Play it back up into propulsion. Aussie dollar yen. Just had the reversal alert on that one. 125 ADR. Nicely extended to the downside. RSI not quite at the 25 level. So close. 26.18. So that is potentially a long opportunity there. Back up. It's a scalp play. Any ADRs you take initially, you want to be scalps in, out, same day, just quick moves. So there's your 5-minute reversal alert already gone in. So that would have been your entry there. You're in profit. So look for somewhere around about a quarter to a third of an ADR, or a third to a half an ADR. Half an ADR, and this is 47, which is there. So just look for a push back up into the middle of that drop. CAD yen, same thing. I'm out of my CAD yen from the other day. Oh, that was an old one. What the hell was that? I don't know what that was. Some kind of weird artifact. CAD yen, so there's your entry. Oh, I'm long on this one. So just got long on this H1 M5 mean reversion. So I'm long. Target. Gonna have to go for the highs on this, I think, to make it worthwhile. As we've got FOMC, so I'm going to stick my TP up at the highs, which is 175 ADR. Chances of hitting that today, I think, are remote, unless we get really big move on FOMC, in which case, if the US dollar pumps hard, the CAD will go with it. The yen, always difficult to forecast what the yen's going to do off the back of FOMC. Sometimes it goes mental, sometimes it doesn't. It depends whether they put money into the yen or pull money out of the yen to do the vice versa with the US dollar. So there is potential for the yen to power up on a US dollar move. So if we get a negative US, we might find we get a positive yen, in which case this is coming down. If we get the opposite, it's going to go up by just as much. So there is an opportunity for that to pump today. All these yen pairs, I think, are likely, to have another leg to the upside. I was expecting a leg to start to the downside and continue. We haven't really had much strength coming through on this yen. And typically what happens with the yen is it powers up and then it rallies. What we got with the yen this time was a power up and a dump. And we haven't had that second leg really start. It tends to be really strong. When it gets strong and it stays strong. A little bit like the Swiss franc, but it's not at the moment. So I think with these yens, potentially we might be looking at another leg up. If you look at the US dollar yen, that 145 level is where potentially I think we might head if we get positive FOMC result. So the Canadian will go with that. So there's an entry there on the CAD yen. Long already. Euro odd. That's an ADR hit today. Hit to the upside. Euros had a bit of a rally. Australian dollars had a bit of weakness. But I mean, you'd never get in that one today. Pound odd. So pound odd is basically, hit to the upside. So a good short opportunity on that one. Pound, I'd much rather be buying, and Australian dollars just had bad news, so this is much more of a long than a short. I would probably bypass that one today because we're expecting the pound to rally. So there's your ADRs. RSIs, there's lots of them, pretty much the same thing. If you look at the RSI dash and the ADR dash, Very, very similar stuff. Just quickly look at what the indices are doing. So long on the S&P on the 5-minute ORB. You look like you may have triggered short on the NASDAQ. Touch and go, depending what your offset was, but you probably triggered short on that. So long there, short there, but not moving anywhere at the moment. Look at the RSIs. We should catch up on what. Nathan, how are you doing on your funded accounts right now? Any in phase 1, phase 2? I've got one in phase 1. I've got 2 in phase 1 at the moment. 1 funded. That's what we've got at the moment. Trying to use pre-market breaks on the challenge. Yeah. It's random. You know, the thing with the opening range breakout EA is, and I say this all the time in here, it will work or it won't. Yeah, that's why you take multiple funded accounts, multiple funded evaluations. The ones you get are brilliant. The ones you don't are crap. Yeah. So I've got one account. My funded account is sitting waiting for pay at the moment. I'm waiting for payday, basically. I've got evaluations running, which are, you know, milking it. This one. This is done $9,600 in the last 3 days. I've got 1,500 running open. Yeah, I mean, this is what it's all about. Hit targets, stick, and withdraw. When it's not going well, you're not going to hit targets. You're not going to get valuations passed. You're not going to withdraw. It's not up to you. It's up to the market. It's random. Yeah, that move there right now that has just made me $1,800 and I can bank another 2,100. That's most people's dream to make a month. 100K account. That's what you make. Yeah. But I'll have weeks where it goes absolutely hideously wrong. Swings and roundabouts. Long term is what you want to focus on. But prop, don't focus on trying to hold long term. You can't do it. You'll have. I did 2,800 on futures yesterday. That's fine. Thank you very much. Don't touch it now. It's 2,800. That's my mortgage paid for 2 months in 1 day on futures. That's the way you need to look at it. Focus on the big days and getting those paydays. That's what it's all about with futures and funded in general. Or get your own account and just dive in with your own money. But obviously keep your risk a little bit lower. It's not your money with prop. That's the beauty of it. Which prop firm do you recommend for a swing strategy? Whichever you want. Up to you. If you're swing trading, you're using a stop loss. So it doesn't matter which one you use. Go to the website, go into the trader funding section and pick one that suits your needs. Yeah. So if you go here and pick a firm that fits your criteria, you can filter all the prop firms, or the top prop firms, by whether you can hold at weekends or not, and do news trading and all that sort of stuff. And basically pick the one that fits you. If you're swing trading, you're not going to be passing quick, so the minimum days is irrelevant. So what you'll be focusing on is your payout profit share. And if there's a max days, really, apart from that, they're all pretty much the same. There's very little between them. Pick the ones with the smallest targets, I would say. Again, it's always going to be my Forex funds and E8. Those are the two. You can't beat my Forex funds and E8. You just can't beat them. I have never found a firm out there that's better, as you've heard me saying here probably many times before. But you choose one that fits you. But those are the big players. There's no point, you know. It's like I always say. Why would you go and buy something from a small company that's just started that charges 20% more when you can buy it from a big company that's been established for 20 years, can deliver it tomorrow at the cheapest possible price? I don't buy anything from anywhere but Amazon because I get it delivered tomorrow at the cheapest guaranteed price by a company that if I don't like it, I just send it back and they refund me before I even put it in the bloody post. Why would I choose any other company? EA and my Forex funds are the biggest, the best, the cheapest, and the fastest payers. Why use anyone else? I get constantly bombarded in Telegram. Hey, have you seen this prop firm? No, but are they better than EA or my Forex funds? Well, they do things different. No, they don't. No one does. The only way that these guys are ever going to get beaten, in fact, I'm just trying to think of a way that these guys could get beaten. I mean, profit share, maybe. Phase one, maybe. But the only thing really that I think is the game changer, which is left for prop, is this, the daily max loss. Yeah. The company that removes that from their statistics on a funded account, there are some that do it already, but only on a valuation. Then you get funded and they put it back. So they change the goalposts. Pointless. Why give you an evaluation? Why give you, it's like saying, here you go, you're going to now run the 100 meters. You practice for 10 years to run the 100 meters and eventually you become the person that wins the 100 meters. And then they go, right, let's do it for real now. It's 1,000. Like, well, I'm a 100 meter sprinter. No, you've got to do 1,000 meters now. No, you've been training me for 100. No, it's 1,000. What's the point in that? So you got prop firms out there that go, hey, there's no max daily loss. And then you get your account and they go, now you can't have more than 4%. But I've just developed my entire trading strategy to work within 10%. Well, sorry, now it's 4. All cons. Anyway, let's stop talking about prop. RSIs we're going to look at, won't we? Aussie dollar Swiss. I do go on rants. I like ranting. Aussie dollar Swiss, RSI extension, exactly the same as we just looked at with the ADRs. Back up into there. Aussie dollar yen, extended, same thing. So Aussie dollars dropped. Potential move to the upside. This one, potentially we have got more upside on it. Of all the yen, the Aussies, well, all the Aussies, the two Aussies that have dropped today, this would be my preferred one because I think we've probably got more weakness maybe coming in the yen now. We're going to find out on Friday. Again, there's no point in speculating on anything. Friday, we get the Bank of Japan outlook and their monetary policy statement. Friday, we'll find out what they're going to be doing. Until then, I kind of think the yen's going to be weak. I don't know. Find out Friday. CAD Swiss, this week's just, you can look and analyze as much as you like, but it's all going to shift tonight, tomorrow afternoon, and Friday morning. So, CAD Swiss, RSI extension to the downside, not quite got extended enough. It's come off of a lovely support level there, or previous. What the hell is that? 2 week ago's low. So not a very rubbish level. It's that level there, basically, from 2 weeks ago. It just happened to close there and then spend 4 days accumulating around it. So it's not really a level, but it is where that weekly closed. So we've got this big potential pullback at the moment. But FOMC, Euro rate tomorrow, could do anything. But it is had a big push down, so more likely going to spring back up. I think we're going to get these propulsion gaps done, but if the FOMC comes out negative and the euro rallies off the back of its interest rates, this thing's going to be down there, isn't it? Absolutely collapsing. So I want it to be properly extended before I get interested. CAD yen. So this is nicely extended. Just in this one, this is one we just looked at. So we are nicely extended below the 25 level. In on that one on the M5 reversal alert. Initial target, going to give it a bash for an FOMC rally this evening. May work, may not. If not, we'll be scaling down into this. That one's pretty much done, into this propulsion area here. So this accumulation break, that's where we'll come back down and test. So be scaling in that. Then we've got the low. And then if it gets all the way down there without doing a profit take, we'll get out on the profit take. Euro yen, same thing. Yen, euro down, yen potentially weakening to give this another leg up. So this is a pullback on that move potentially. We've already tested this area and rejected it once. If it does get down to there, we'll probably find we get a double bottom. So it's not a bad one to get into now, I don't think. But again, you haven't had a reverse alert on that. Miles away. Last bear candle was bull candle was there. So the problem with taking this obviously today is you're taking it ahead of the euro rate announcement tomorrow afternoon. So this thing could go anywhere it likes, couldn't it, tomorrow? Pound odd. So moving on to the safer pairs, which haven't got news coming. God, that's a beauty. Look at that. If ever you want to see support and resistance in action, there it is. That's come off of a previous week monthly high to the pip. Or low, whichever that was. I've got to a higher time frame, aren't we? There we go. Can't see it, but it's there. Look. That was 2 months ago's high. We hit it, rejected it. Came back up, used it as support. Pushed away, came back down. Hit it again there. Hit it a few times in there. To the pip. So yeah, nice rejection there on the pound odd. This is a long, so this is an ADR reversal at the moment today. And obviously every chance that this can play out. M5 reversal alert's just gone in. Absolute beauty. So look for a half ADR max out of that really. But this is a long for me at the moment. The pound, there's no reason why this pound shouldn't continue this rally. We've got at least 0.75 to 1.25 interest rate rises coming. Unlikely we get the 1.25 now, more likely the 0.75, but we've still got 2 to 3 interest rate rises coming on the pound. Australian dollar CPI has just dropped, making it weaker, meaning that they don't have to put their interest rates up. Everything's looking more like that for the Australian dollar. So should be dropping. Forecast on the Australian dollar interest rate rise next week is stable. Yeah, so again, the market won't like that. So yeah, all down on the Aussie, all up on the pound. So as you can see, I had a buy on it there. Can't really see it, can you? It's on the hourly. But that was an H1 RSI extension. So you're better off on your longs than you are your shorts on this. The shorts will still work, but you'll find the longs will play out a lot easier and quicker. We've also got the pound CAD extended to the downside. Same story with this one. Just exited the pound CAD longs today. There. And EA has flipped me in short out of this propulsion gap. So I don't really want to be in that. I'm closing that manually. It might work, but I'm not going to. This for me fundamentally is long. So for me to take a short on this, it could well work absolutely fine. Probably going to come down, fill that propulsion gap and bounce. We've got FOMC this evening, yeah? So I do not want to be getting in anything on the Canadian dollar or the US dollar on the day that the FOMC announcement could collapse the US dollar or pump it. You know, we don't know what's going to happen, but more likely weaken the US dollar, which will weaken the Canadian dollar. So if that happens, the pound is going to rally against the CAD. Obviously, if the CAD weakens and the US dollar weaken, the pound is going to go up against the Canadian dollar and the US dollar. So the last thing you want to do is, before that potentially happens, is have a sell on. So I'm out of that. If you want to take it, that's fine. It is an RSI extension, but you know, technicals are trumped by fundamentals. It doesn't matter what a technical indicator tells you. If there's a fundamental shift in a currency and the market wants to do something, it will do something. This will be up there. This will be up there. Yeah. If that news comes out on the FOMC that actually, no, we're going to put it up. We're actually not going to put it up, and we're not going to put it up anymore. It's coming down. Yeah. So the pound CAD is going up. So I'm just going to get out of that one flat. There's no point in taking additional risk ahead of the news. But that is an RSI extension to the upside, and technically it is a nice short. It is a lovely propulsion gap area where potentially they might add in, but equally we'll want to come up and test that. So no point taking it. Let's see if there's anything else that's been taken. CAD yen, isn't it? See, I don't mind that. I think the yen's probably going to weaken. So that one, I think, has got more chance. The thing with the CAD yen is, even if they do weaken the CAD, putting big red dots, Bulger, up there, isn't the chat's not moving that fast. I can see it, and spamming chat is not going to get you any interest from me at all. So yeah, with the CAD yen, basically, if this does come down, the Canadian dollar and the US dollar does drop. I think there's a good chance that the yen will weaken, which means that at some point when that drop stops on the Canadian dollar, it will have enough movement up basically to push back down. So I'm just going to this idiot. Sorry, spamming chat. Not interested. So yeah, so there you go. So that's the CAD yen. So that's all your RSIs covered. That's my P&L. That's your RSIs covered. Just be very careful with everything that you get into today. It's just before FOMC. It's just before the euro rate announcement tomorrow and the yen announcement on Friday. So these 3 days today from 7 p.m. this evening onwards, potential chaos. Yeah. But as we've seen in the past, could also do absolutely nothing. Yeah. We've had interest rates coming out not as expected in the markets, not battered an eyelid. So, you know, we just don't know. But as far as risk is concerned, what you've got on, that's fine. You're in it. Nothing you can do. But there's no point in taking additional risk. You are literally gambling on a coin flip of it going up or down. So try not to get any additional risk on, unless you fancy having a little gamble, which is fine. Nothing wrong with a little gamble. But just be prepared to go into drawdown for it for weeks if you get the gamble wrong. That's all I'll say. Pull back on the Dow into propulsion. S&P is pulled back into the 5-minute ORB. NASDAQ's pulled back into the 5-minute ORB as well. So that initial cash balance was the move today. So far, market's not interested. Tricky. So basically, I've got the Dow paying for the S&P at the minute. This is a little bit like yesterday, isn't it? It's just not going anywhere. This is what we had yesterday. If you look at, was it yesterday or was it the day before? Can't remember, but it was basically really struggling to get going, wasn't it? Wasn't yesterday. Yesterday went. Must have been the day before, where we just kind of had one of those sideways days, sideways sessions. So hopefully we break long on that, but and continue that with the Dow. We'll see. Right, anybody got any other pairs or anything they want to have a look at? Nathan, new trend for prop is buybacks, where if you fail your challenge, you can pay a percentage of the maximum drawdown in order to skip the challenge and get back to being funded right away. I heard of that. In futures, they do that. In futures. So Take Profit Trader do that. If you fail a funded account with Take Profit Trader, you can pay a fee to immediately get the funded account back. I'm not interested in doing that. The fee that you have to pay is worth 3 evaluations. I'd rather take 3 evaluations and have a chance at have a punt at getting 3 more funded accounts with you rather than pay you 1 to get that funded account back, hit a bad losing run for 3 days and then lose all that money. Doesn't make financial sense to do it. But from a business perspective, it's just not good for the trader. Good for the firm, because obviously they're not taking any risk, are they? Because they're not really funding you. They're giving you another demo account to trade. Dow's holding at the moment. S&P's looking like it wants to go. It's all wicks to the upside at the moment. So buyers are propping the market up basically. So breakout long looks more probable at the moment than short, but it can change in a heartbeat. Can we take a look at gold? There's some gold. Sorry, standing joke. Obviously, I've no idea. You tell me which way this is going on FOMC. So US dollar goes down, this goes up. US dollar goes up, this goes down. I don't know. It's like asking me to forecast the outcome of a football match just as it kicks off. I don't know. I'll tell you at the end. I'll tell you at the end of FOMC whether you should be buying or selling gold. But if the US dollar I can't see a particularly strong future for the US dollar at the moment. So that would be indicative of longs on gold from a fundamental perspective. But you never know. The Fed could come out and completely upset the apple cart this evening. Very difficult to tell. But I would be more interested in longing gold than shorting it. Same way as I would much rather buy euro US dollar and pound US dollar than sell it at the moment. But we'll wait and see this evening. Everything moves in monthly cycles. At the moment, everything moves in monthly cycles around FOMCs and around interest rate rises, because it's the entire market at the moment is being driven by the fundamentals. So it's all about inflation and interest rates. Yeah. When we get inflation at 2% across the board and interest rates are stable and don't move for 3-4 months at a time, and then when they do move, they only go by 0.25% because we popped up to 2.5 inflation and then it pops back down again and everything's like normal. We focus on unemployment figures and other things that move the market, GDP, how the economics are doing. At the minute, every single country has got one focus: getting this thing down, which has been caused by food and energy prices and the war in Ukraine. So it's all about this. So we're living at the moment, month by month, FOMC to FOMC, to figure out what the Fed thinks it should be doing with the US dollar. And then we move for a month, then we wait, and then we'll do whatever they say for the next month. That's basically what the market's doing. So you just got to wait. And gold is exactly the same. You need to wait for the information to decide whether or not it's a buy or a sell. And that will just be decided by whether the US dollar is strong or weak. And if, again, we don't get any indication from FOMC, that's what you'll get. If there's no directional bias, there will be no direction. We will go sideways, which is exactly what we've done there. We go into balance. We price discovery, balance, price discovery, balance. The next one will be either a continuation of balance or a price discovery into balance. Those are the 3 likely outcomes I see for gold over the next month, or month, 6 weeks. However, FOMC come out and go, nah, we've decided not to do anything with interest rates. Gold's going to do that. And it will go into price discovery until someone says, nope, we're not interested. And it will just keep going. If they say, we've decided actually we've really undershot and we need to go up to 6.5%, gold's going to come down and it's not going to stop for a month. So again, your entire life in Forex trading revolves around this thing. This is what moves the markets. And this evening, we will find out. And all the technical traders are going fundamentals or fundamentals, as they call them. I used to call it fundamentals years ago. When I was a technical trader and I didn't know anything about fundamentals, I used to call them fundamentals. On turn. Don't pay any attention to the fundamentals traders. All they do is sit around waiting for the news. Then I suddenly realized, actually, that is why the market moves. And I'm looking at the technical traders going, you're looking at a line and you expect it to react to the line. When the market goes like that because of interest rates, you're nuts. You can argue as much as you like. No one can predict the future, but at the end of the day, it is fundamentals that move the market. That's why economists pay attention to them and the market analysts pay attention to them. They don't look at trend lines. You won't find a market analyst in a bank going, hey, look, next time it comes up to this line, let's sell it. They'll be going, the interest rate's going to change on the US dollar. Let's buy it. Brian, 725 short on NASDAQ. 5-minute pre-market. Triggered long, but not liking it. There we go. Dow's going for second leg. S&P's trying. NASDAQ's really not doing much. DAX is having a nice little pullback at the moment, so it does look like a long to me. Much more long than short. Those wicks tell you the buyers are in control. Whether or not they could get that break. One stop, 2R hit, stop recovered. What? One stop, 2R hit, stop covered. 1R banked on EU ORB today. All right, okay. Probably going to close before FOMC. I would definitely close before FOMC. Well, up to you, actually. You know, FOMC's, I've had some amazing profit, like profits like you wouldn't believe off of FOMC. Because I've had trades on, here you go, Euro US dollar, for example. I'm long on the Euro US dollar now. If this thing was for any reason to manage to get up to 125 ahead of FOMC, I would just break even that trade, remove those TPs and sit there and go like that. Because if the US dollar collapses, this thing will be out of the roof and will be up here. Yeah. So I will be going, thank you very much. That's 5%. That's half of my entire month's target done in one trade. So take it. You either take it off in fear of losing it, break even it in hope of gambling up to a massive winner, and also even hold it. Yeah. If this US dollar tanks this evening and you find yourself up at 300 ADR, right? Leave that break even in place, go away and do something for a week and come back and see where the Euro US dollar is. Because if that US dollar is going to collapse, yeah, and it's going to continue to collapse for the next month, just trying to get out far enough, yeah, we're going here. Imagine what that trade would be worth there if you could just hold it for that long. Those are the ones that pay the mortgage. Out of NASDAQ, 1,055. Done for the day. Good man. I'm considering closing this out and just banking it today. I've got no faith in these indices at the moment. There's just no momentum. This 5-minute opening range is the momentum today. That candle was 1340. Half an ADR. Half an ADR in one candle. It's shot, isn't it? Going to find it very hard to find anybody that wants to buy any stocks. They've all bought them. But break even there. I'm willing to give the S&P a chance to rally. We've had more positive earnings than negatives, so in theory, the indices should be heavy, should be light. They should be rising, but we'll see. But I'll monitor these. I've got nothing else to cover today. There's no point in really doing any analysis on anything because it's all about this evening. Once this evening's out of the way, we'll have an idea where we're going. So all I'm going to do today is just watch what I've got. I'm pretty much break even on the day. So this evening, before FOMC, anything that's green, somewhere around 0.2 to 0.25% plus profit, I will bank. And make sure that that is protected and realized, and then obviously deal with everything else after the event. Euro Swiss, I forgot to mention when I started. I've got that aggressive drawdown control position on that we looked at this morning on the Euro Swiss. So, can't quite see it, can you? But that's it there, that order there. That is a 2.5 lot long aggressive drawdown control position. I'm hoping, or was hoping, to get some kind of rally off of this before the news, but obviously it's not. We are literally flatlined for the day. So if it does get up towards the highs, I'll have a break even on this ahead of the news, because if the news drives this down, I do not want to take a loss on it. I will break even on it. It's an aggressive position, so it will either go my way or it won't. If it doesn't go my way, I will make sure that I get back to break even on it as soon as possible. There's no point in taking this risk, which is, I think it's 0.75%. Yeah. So I've got 0.75% on that. There's no point in taking that loss. If we get up to there, it could easily do that as a whipsaw. Yeah, the euro, because it's everything can move off of FOMC. There's absolutely no point in taking a 0.75 loss on a whipsaw. So if we're up here, that will be break even, and I'll take, if I get slipped on it, I'll take a little bit of loss, but ideally break even on that if it whipsaws. If it doesn't and it goes, obviously I shall milk it for all it's worth. But it is an aggressive position, so it's got a stop loss on it. But this is, you know, I'm only sitting in 2%. It's not in deep Euro Swiss. It's just a couple of percent in drawdown. So, but it's the only thing I've got at the moment that is pretty much not break even. So. I think next month I'm going to set 2 separate accounts, one short, the other longs, and not touch it. See what happens. Try it. Do it on demo for a couple of weeks, Brian, and just see what the mechanics are of it. Because I think you'll need to manage that. It depends on where you're going to put your stops and things. But, you know, look at the S&P today for me. If this drops today... So there's my sell pending. I'm triggered long. If this drops today, oh, actually, I won't hedge on this. I'll stop out on it. But you know, you can get hedged depending on how far away your stop loss is placed outside the range. So if you find the market is doing this, and then it suddenly does something like that, again, you might find yourself in a position where you want to close one of those manually. So you're going to have to keep an eye on it. But if you just let it run, and it's just taking longs on one account and shorts on the other, if you have a bull week like you just had on the Dow, yeah. So literally every ORB long, whippy day there, but yeah, all the ORB longs, literally another whippy one there, yeah, all worked. So what you'll find is, and this is why the prop firms don't allow you to run multiple evaluations with the same strategy, because what you do is you take shorts on one, longs on the other. And if you have a couple of bull run days, one of them passes and one of them blows. You'll probably find that will happen on your 2 accounts you'll run. You'll have one that goes into negative constantly and one that makes an absolute fortune. As long as you're limiting your downside and you're letting those winners go, you will make money on the 2 accounts, which is exactly what we do in the UK, because we can go both ways. But yeah, try it. There's many ways to make money, but with the ORB strategy, it's a momentum breakout strategy. So you go with those momentum breakouts, and when you get them, like the DAX today, you hold them as long as you possibly can, which is hard when it's pulling back like this, but you know what it's all about. Have to set one on Oanda and the other on IG. Are you going to do a FX pair? Yeah. FX pairs, obviously, they are very different, but you still get runs. You know, we still get big bear weeks. You know, you look at a weekly chart. Yeah, we get big bear weeks, get big bull weeks. You're going to get the same thing happen, but the vast majority of the time you'll find small bodies, large wicks on FX. Just the way the market moves. It's much more up and down, finding liquidity pools than indices are. Right, I'll leave it there today. So I'm just going to manage these positions going into the FOMC announcement. I'll bank what I can. I'm up 23% on the month so far, so not really wanting to take any excessive risks because I don't need to. So I'll be banking stuff, and depending on where everything is, obviously maybe breaking even on some things. But Euro US dollar at the moment is not playing ball, so we'll see. It's either going to go massively into profit or massively into drawdown. That is typically what the news does. Or it's going to go massively into profit, massively into drawdown, and come back exactly where I started before the FOMC announcement. But anyway, I shall be watching. Right, so back tomorrow morning, 7:50, same time as usual. Hot and sweaty because I've got my class tomorrow morning. There's no news overnight we've got to worry about. So after FOMC, you're going to find some movement in Asia. Obviously, when Asia wakes up, it's going to be reacting to the FOMC results. So we will get some movement in Asia, possibly some ADRs. But we are then waiting for 1:15. So there's no overnight news to worry about today. There is tomorrow because we've got yen tomorrow evening going into Friday. So we'll see what happens. We'll unpick it tomorrow morning and see where we go from there. Make sure you do some wild swimming to cool off. I definitely will. But then again, I need to buy myself a house with a swimming pool or get someone to film me in a big house with a swimming pool next to my Rolls Royce and jet with all my staff. For any of you that don't know what I'm talking about, I'm pretty sure you all do, don't you? There's certain people that advertise on YouTube that say they like to go wild swimming with their staff that teach Forex. Anyway, I'll leave you with that lovely thought. When you say 26% for the month, yes, 22.8%, not 26. Is that across multiple strategies? No, just this one. This is just H1M5 mean reversion. This is the market reverse alert CA. H1M5. Prop and ORB is all different money. Dow's pushing just before I go. S&P rejected again. Look at the buyers. There are way more buyers in this market than sellers today. They're just not able to get enough of them together at the same time to make a break. So I think it's going to happen. But yeah, that accounts just H1. Right, so I'll see you guys tomorrow. Have a good one, and good luck on FOMC. Hopefully we'll make lots of money, and we'll find out tomorrow. All right, have a good one. I'll see you in the morning, 7:50, same time tomorrow afternoon, 2:20 as well. Okay, have a good one.